Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. It is also December 14th here, and we got a few items here on the economic calendar. We'll jump right into it. We'll start with the retail sales, which got pretty much a high impact on the economic scale here. As you see, in October, we had a pretty good month here. It was up 1.1%. Forecast for November was only supposed to be zero point 0.1, and it went up 0.2%. Now, when you move the big ticket items like autos, which can obscure the numbers, it in October went up 1%, and forecast for October or November was 0.2%, and it came right in expectation. So a very strong November here for retail sales. Perfect timing for the holiday season here. So good news right there. Let's kind of move on here. We got the industrial production for the month of November. October, it dropped 0.2%. So forecast for November was supposed to go up 0.4%, and it actually went upwards to 0.6%. So good numbers there overall. And then we got capacity utilization. So in October it was at 78.1, which is a still pretty high number here. And forecast supposed to be at 78.6. Came in slightly under, but still up 0.4%, which is a good number here at 78.5. And then last but not least, we got business inventory. So in for October, so in September we had a 0.5% increase. In October it went up 0.6%. So overall, actually, domestically we have some strong numbers that came in here. None of these were weak, which should be bode well. However, on the stock market, things are down. It's taken its cue. Domestically, we're looking good, but on a global level, some economic data came out of China and from Europe that didn't look so good. The PMI, the manufacturing PMI out of Europe, out of like France and Germany, came in much lower. China had some numbers that came in, which was the lowest since like 2003. So this is really creating some concern, even though there's some optimism between China and U.S. and China is taking steps into that the negotiation phase that they promised with the reduction of the tariffs. And then I guess they just acquired a big shipment of soybeans, which were heavily tariffed before. Uh, they're taking the steps that to ensure that we are moved towards this trade agreement that they apparently had discussed at the G20 about a week ago, and that at least that side looks positive. But in the meantime, investors are concerned because on a global, since we're all intertwined on a global level, it doesn't look like things could be growing anytime soon or growth, and they think this could last a little while. So far, the U.S. again, we're pretty resilient. We're showing a pretty strong economy as of yet. Let's kind of move on here, see how this bears on the bond market. And bond market, as you can see here, we're up from yesterday. We're starting to get this reversal here, which is kind of interesting. After we kind of touched off the double floor support, we kind of got these patterns going upwards, even though we're down for the day, but we're still up about 2 to 5 basis points. We've been kind of fluctuating between this range here and now we up to here about 8 basis points since I did the screenshot for you guys. So right now, I wouldn't say there's an improvement in pricing, but it's at least on the positive side that it's helping out mortgage-backed securities. Again, this could be temporary. We don't know, as we are in a overbought position here. As from the stochastic calendars, we do have to watch that, and we do got room to the downside as well as a little bit of room to the upside. So be cautious. Again, no change in pricing for interest rates today. Here's the 10-year Treasury. We're kind of at no man's land. We're down right now. We're down to about 2.89 on the yields here. And again, as you can see, it's kind of changing. And this one is in a oversold position. So this one again has room to go the upside. It's kind of no man's land where it has plenty of room to go upwards to the 200-day moving average. Also, it could fall further as well. But if you look at the stochastic charts, it should actually rise, which will put more pressure on the bonds. So just again, be cautious out there if you're in a transaction, have not yet locked in, may want to float a little bit, but have a quick finger on the trigger if it looks like it could slide anytime soon. All right, so that wraps up the report here. If you guys want any further data, if you guys want to get updates on that, just come over to Twitter. You can find me at Mike Bjork on Twitter. I will be posting any changes in the markets on there, especially the market close. You guys have a great rest of your day. Enjoy your weekend. We'll see you guys on Monday. Thanks for watching. Bye-bye.